Today's event is a session to discover and discuss search funds, which are an instrument for young managers and professionals to become entrepreneurs by acquiring a company. This is a topic which is close to many Bocconi alumni in London who operate in the world of business, finance, and entrepreneurship. And as such, I am delighted to introduce the speakers for this evening. We are lucky to have a very high-profile panel, starting with Fabio Sattin, Executive President and Founder at Private Equity Partners, as well as a Professor at Bocconi University. Fabio Sattin will introduce the topic in more detail and therefore will also moderate the panel. Our three panelists are Professor Stefano Caselli, Dean for International Affairs at Bocconi, Giancarlo Aliberti, Private Equity Senior Professional in Apex for 20 years, and now advisor to funds and an individual investor. And finally, Guido Fileppo, a successful searcher and now the CEO of Farmoderm, an Italian company in the pharmaceutical space. Thank you very much to all the speakers for participating today and sharing your contributions. The event will last roughly 1 hour and a half in total, with the possibility for Q&A in the last 15 to 20 minutes. And for this, I would encourage the audience to submit any questions in the chat. We will then select some questions and pose to the panel. In terms of house rules, we would kindly ask everybody to remain on mute and with the video turned off in order not to distract the conversation. And finally, just a note on our association in London. As you know, we are part of the broader Bocconi Alumni Network, which comprises roughly 120,000 alumni globally, divided in 70 chapters. There are more than 5,000 alumni in London that attend our events throughout the year, and we hope to be in a position to soon go back to see each other again in person. All of our events are published in the monthly newsletter and alumni website, and we have some interesting ones in the pipeline for the near future on several topics, so please stay tuned. I think that's it for me for now. Professor Sattin, I would pass it on to you now to introduce the topic.
Okay, thank you. Welcome to everybody. Thank you, Stefano, for the introduction. And I'm very glad to just speak about this very important topic that, is recently arrived in Italy through Bocconi and started in US. And thanking everybody for being here. What I will try to do in few minutes, 10 minutes, is just to recap very quickly what a search fund is, what is the objective of the search fund, and then go with our panelists and discuss a little bit more in detail, this very interesting, instrument. A search fund, as Stefano Catapan just said, is a way to help young people, normally a young professional, normally having an MBA, to become entrepreneur. Normally, the normal way is maybe to do a startup. So a lot of people think that to be an entrepreneur, they need to do a startup. It's not the only way. An alternative way to become an entrepreneur is to use the search fund model. The search fund model started in Stanford. So, really is a product from a university. And this professor in Stanford, he was teaching entrepreneurship finance, and he was thinking, but okay, I'm teaching to students at the MBA how to be an entrepreneur, but they cannot do because they don't know how to start, if not with a venture capital activity. And then he started, identifying this instrument. And a search fund is basically an investment vehicle that allow an aspiring entrepreneur to search, acquire, and manage and grow a company. And then, if everything goes well, to become an entrepreneur. So I think also from a social point of view is a very interesting instrument. Normally a search fund, very quickly, the final objective is to find a small company. Small mean in US, a company rarely having more than 10 million US in turnover. So very small company from, let's say, starting from 3-4 million up, but even smaller. And how he can do that? I mean, normally the first stage is to find some sponsor, some investor, but I like to call them sponsor because really, I mean, the first stage is to find from 10 to 15 normally high net worth individual having a previous experience as entrepreneur, as manager, as private equity investor, as Giancarlo Aliberti, for instance, is also an investor in a search fund. And I mean, the first step is to find from this group of people an amount ranging from 300 to $450,000, okay? And this amount is called search capital and is used to practically allow the searcher that normally is an MBA student with 2, 3, or 4 years of experience to resign from his work, so leave his work and start 100% having his time dedicated to search for a small company to be bought. And so, I mean, the first initial capital, the so-called, startup capital or search capital is used just to allow the searcher to survive. I mean, because he needs to have some money and also to pay the cost for the due diligence and for the search. As soon as the small company is identified, the searcher, I mean, negotiate the acquisition, and let's assume that the equity component needed. Normally, those are a small company, but it's like a small buyout. So normally you use also leverage, I mean, to buy those companies. And so let's assume that the equity component is, I don't know, 2, 3 million. The searcher go back to the 10, 15 investors, and those investors, they have a right of first to pay and to, I mean, subscribe the so-called acquisition capital. So the capital needed to acquire the majority of the company. If they don't, if they are not, I mean, willing to invest, maybe the searcher can add additional investor at that stage. At this point, I mean, the searcher can buy the company and he becomes the CEO of the company, and Guido Fileppo is just, I mean, representing a searcher that has founded and now is a CEO. And he starts running the company, trying to increase the value of the company that has been acquired. Obviously, with the help of the investors. The role of the investor in search fund is very, very important because they are not only providing money, especially the initial investor, but they are also providing contact, expertise, support in negotiating with the bank, in negotiating with entrepreneurs. So it's very important to select the right kind of investor. Maybe out of 15 investors, only 3 or 4 are really active, unless you have not a sponsored search fund that are now, I mean, developing in the US. So it's very important to find the right investor. They are involved in all the process. And the mechanism normally allow the searches according to specific milestone that are negotiated with the investor. If everything goes well, practically the searcher can arrive to receive up to 30% of the company, 25 to 30% for free. So practically, if things goes well, he has an incentive mechanism that allows him to arrive at, to have a very relevant position, to have a relative majority of the company. At this point, the searcher has 2 choices. One, to sell all the company. So because sooner or later you have to produce a return for your investors. So you can sell the company, and also the searcher realize his percentage, and then he can use this money to do something else. Is one option, quite popular option in US, by the way. Or he can capitalize on this 30% to do a re-leverage. Okay, do another transaction, maybe paying out the original investors, finding new investors, realizing the 30% and using this amount to capitalize a newco and then buy the majority of the company and become an entrepreneur, because it's not a financial exercise, search fund. It's an industrial exercise. The final objective is to create new qualified entrepreneurs. And the fact that in 90% of the case are MBA graduate, you can imagine the great potential they have, because they are young entrepreneur, but with a great potential. They speak languages, they know how to go around the world. So I think is a very interesting instrument. As I said, Who are the investors? Investors are mainly, as I said, people like Giancarlo with, a previous experience, so they're providing a lot of support. You now have also so-called, incubators for such fund or accelerator. Now in US you have 10, 11, subjects that are investing in a systematic basis in search fund. They are called accelerators, and they provide normally support for the fundraising, certainly for the search capital, and sometimes also for the acquisition capital. So they are taking out from the searcher a lot of work in terms of finding the financial finding. It's not easy to find for a young guy the finance, and accelerators are normally there to support the first stage. So they find all the search capital, and sometimes they underwrite a great chunk of also the acquisition capital. Okay, and that is a new generation of search fund. And you can have also other kind of model, also self-funded search fund. Sometimes, if the searcher is rich because his father maybe has money, he can fund himself at least the search capital initially to go ahead. And we can also have, and now in US, we have also some crowd-funded search fund founded by the crowdfunding methodology. But I don't think that is very good, because with the crowdfunding, you don't have one of the big plus, that is the role of the investors. With the crowdfunding, you lose the mentorship approach. And the mentorship is fundamental for the development of a search fund, because the entrepreneur needs the help of the inventor. The typical profile of the searchers, as I said, according to the statistics are done mainly by Stanford and by Jese. And let me say that we are proud to say that in Italy, search fund started to be studied at Bocconi with Stefano and myself in our course, Private Equity and Venture Capital course, was the first course in Italy introducing search fund officially. And we are very proud about that, because now if search funds start to be known in Italy, it's also thanks to Bocconi, but that's exactly the role of Bocconi and also Stefano Caselli, which is also the director of the department. As I said, going back to the typical profile of a search fund, the average age is 31, 32 years, range between 25 and 51, and normally 90% holds a qualified MBA. So they are very, let's say, qualified, and they have to resign from very important, as Guido did. He stepped out from his work. That was a very well-paid activity, and they're risking, their life, to become entrepreneurs. So that is the typical profile. The same in US, obviously, they are much more developed compared to Europe, but now also in Europe, they start to be developed. And also in Italy, we have, the first search fund arriving. One last important information, performance. That is the big difference compared to venture capital. As you know, venture capital in Europe is 50% government-backed, because the risk-return ratio sometimes is not so attractive, even if today, I will ask that also to Professor Caselli, that knows very well venture capital. Venture capital, I think, is the right moment also for Europe to have a sound venture capital activity, but venture capital is highly risky. On the contrary, in search fund, returns are very interesting also for investors, and they represent a very interesting asset class. So investors, they're not investing only because they like the game, but also because the potential return statistically, just to give you some, the average return is 30% IRR in search fund with a failure rate of 11%, so quite a low failure rate. And even if you take out the top 3 on the top 8, the top 5 top performers, you rarely go below 20% IRR. Why that? Because the average price paid, let's say that, and Giancarlo Aliberti knows that very well, in US, if you today you do a buyout of a large, you pay in terms of multiple, certainly a 2-digit price, 12, 13, 14 times EBITDA multiples. The average EBITDA multiple paid in US for acquisition range from 4 to 6 times EBITDA. So, you don't need an MBA from Harvard to understand that if you pay half and you can leverage a little bit, the probability to increase your return on equity is much higher. and is also easier to pass from 5 to 10 than not from 100 to 200. So I mean, the basic condition of search fund allow them to be also a very interesting asset class. So I mean, finally, there is no need of any kind of public support. The only thing that search fund need is things like what we are doing today, to be known. No, they need to be known, and all initiatives that are devoted to increase the knowledge of this instrument are welcomed, nothing else, because the returns are there, no need of support. I think we have a lot of potential investors interested in investing, and also we start having a lot of young people that they understand that it's not mandatory to work only on JP Morgan or Goldman Sachs. It's not mandatory to go in Unilever or Procter & Gamble. It's not mandatory to work for Bain, McKinsey or BCG, but they can also be entrepreneurs. I come from Venice, I'm Venetian, so I mean, I think that entrepreneurship is a fantastic way of life, let me say. That's a typical Venetian statement, but I mean, let me say that also for young, skilled people to be an entrepreneur is a real opportunity. I stop myself here because I took out all my time. I hope that this is clear, and now I start, I mean, and let me start with I think with Stefano Caselli. I mean, he has a great experience. Obviously, he's vice rector of Bocconi. And the first question to Stefano is, Stefano, I mean, we introduced in Bocconi, I mean, a search fund. How you see search fund in the big picture of equity investment, that is a kind of mantra today, and of venture capital and entrepreneurship development? How do you see this search fund positioning?
First of all, thank you very much for the invitation, and thank you very much, Fabio. Even if your question is the elephant in the room, and we need hours to reply to your question, but I will try to, you know, basically to put on the table some highlights or some statement that I consider relevant to have a better picture. I would like to start from numbers, because numbers matters. It seems a bit probably too much to start from some numbers, but they are fundamental to reply to your question. My humble view is that if we consider, you know, the trend of wealth in the world, it's very clear what is going to happen. Considering, you know, some figures, just to remember, 2010, you know, the amount of net financial wealth was at 3.3 times the GDP in the world. 2014, 4.6 times, and now is 6 times. And 1/3 is liquid. It's a very positive news. Obviously, don't want to discuss about inequality and distribution of wealth, which is another story relevant for another seminar. But the potential of, you know, liquidity ready to be invested is, you know, gigantic. It's enormous. In the same time, we have to consider, you know, some other macroeconomic data. So interest rates are stuck to zero. We can debate about the future. I don't have the crystal ball, what is going to help and to interest rate. I do not think that, you know, inflation is going to start again. Growth will start, but, you know, the pressure of central banks is very clear. So we are going to live, I don't want to say forever, but for a long time, in a world where interest rates are stuck to zero. That means in portfolio, I'm exaggerating a bit, a crowding out effect of debt. So that is important, you know, to diversify risk and blah, blah, blah. But it's very clear that if we combine these aspects, it's very clear that we have many avenues related to equity, also for a very concrete reason. We have to pay our pensions, and we have, you know, to have a welfare system, and we have to insurance companies able to face risk. It means that they need to invest money, and in a world where interest rates are stuck to zero, they are not able to repay our pension. They need to create upside, and you can create upside in many ways, but at the end of the day, you can create upside using equity. So if we try to sum up, you know, the potential of wealth is enormous, liquidity is gigantic, interest rates are stuck to zero, there is a pressure to have upside. So investors are looking for projects able to generate upside. And equity is the best way to do that, because it's very difficult to generate upside over a certain point using debt, obviously. So it's the right way to discuss about equity. Many authors, I was one of the first, are talking about equitization. So the world is moving to, you know, a state of the art where equity is much more relevant. But in the same time, investors are looking for real projects generating, you know, upside. But in the same time, also, if we read carefully, you know, the recovery plan or the plan much more ambitious, written by Joe Biden, at the end of the day, you know, these projects clearly identify incredible avenues of growth, where the idea is the state is able to put money on the table, you know, to invest in some macro trends, but private investors, they have to do their job and to generate upside. So how to generate upside? We have very different ways. Venture capital is absolutely one of the tools, but I have to say there was, in a certain sense, an evolution of venture capital. As I wrote in my third edition of book, Private Equity and Venture Capital, just, you know, you can find it, it just was published 1 week ago. I tried to identify 4 different waves of venture capital in the world. So between the 80s and the 90s, a sort of a pioneering age of venture capital, especially in the United States, basically nothing in Europe, just simply peanuts. The 2000, where we have, you know, the bubble and the golden age of venture capital, so very, very good and very, very bad in the same time. After 2011, I have to say a more adult phase of venture capital, where, especially in Europe, venture capital is becoming more and more important, at least in terms of interest, you know, of stakeholders, you know, talking about venture capital. You have to say, starting from 2010, 20, not only for COVID-19, but for the reasons I mentioned before, really venture capital is ready to debate and to face much more complex challenges. Venture capital becomes really a long-term investment, really became patient capital, and I have to say is becoming really a key players to promote GDP growth. So if you combine all these elements of the puzzle, I have to say, yes, search funds matters, not because it's the topic of this webinar, but because to me, search fund is able to combine a very, very different piece of the puzzle. Is a new way to invest and to create upside, and investors need upside for the reasons I mentioned before. Second, is a perfectly in line with the new trends, where new trends are, if I may say, green, digital, diversity, support to entrepreneurship, support to younger generation, and search fund is exactly that. So is a tool able to sustain entrepreneurship of younger generation. And third, which is much more related to my job, to work in university, search fund could be a very concrete bridge between business schools and the business world. It's very concrete. It's not written in a book. It's something concrete because it's a bridge helping students, mostly exiting from MBAs, but not only, also from top Master of Science, to consider to find a job, not just simply sending a CV, but sending, you know, a message to investors and to say, I would like to do something much braver. That means I would like to try to lead a company. So it's a certain alignment of stars, and my hope is that it started in the United States, but also Europe could be affected by this tsunami that could be very, very positive, because the outcome of the day means to enhance GDP growth. So I'm going to bet on this phenomenon, but we have to see the story in 2-3 years, and if you're right to bet on this trend.
Thank you,
Thank
Stefano.
you, Fabio, for your question.
Thank you to you. Thank you, Stefano. We will go back to that. And now let's go to Giancarlo Aliberti. Giancarlo Aliberti has, outstanding experience after his MBA in Harvard. By the way, he was an advisor initially. I remember your style then. He had many years in private equity at maximum level in Apex, doing a very large deal. And now is obviously advising various funds, making a lot of investment, and is also an investor in a search fund. And I would like to know from Giancarlo, what is view, how he see and what he thinks, this instrument. Do you think is the instrument, what do you think could be the perspective or the development of this instrument, and what are, under your huge experience point of view, the characteristics, and how do you see search fund in general?
Thank you, Fabio, and and Stefano. Thank you for having me here. First of all, I must say, Fabio, and also Stefano, when I've kind of listened to you, I must say we feel even more excited to invest in search funds, because the combination, Fabio, of getting somebody young to start an entrepreneurial activity, tied also to the returns that can be great. You say, wait a second, it's probably a non-brainer to do this. But stepping back a second, at the end of the day, why is it? And I think it's going to be a trend, and will be attractive. As Stefano Caselli was saying, look, today, somebody, be it a small family office, be it somebody who has done well in life, and they need to put 20%, 30% into illiquid, let's call it. So long-term, 4 or 5 years, maybe even 10-year investments to get returns, right? And some people, on the endowment type of model will go even farther than that, 40%, 50% of that. And today, you have a lot of different ways of doing it, right? You can go and invest in funds, private equity funds, and you have a lot of different funds. You can invest in co-investment funds. You can invest in secondary private equity funds. You can invest in real estate funds. You can invest in debt funds. You can invest in clubs where friends will get together and find larger companies and do it. We have SPACs. I'll come back to that, where you can invest. And the latest trend seems these search funds, right? Where you can do it. But the search funds at the end of the day are competing in terms of asset allocation towards all these other different type of funds. So what makes them more attractive, from my perspective at least, to do it, or at least to allocate part of that 30% of alternative non-liquid investments into search funds? And a few characteristics come to mind. And I'd say that the top 1 or 2 are tied to the individuals that are doing it, and to the, it's called a link that happens between the investor and the individuals. And the first one is, in this case, is a huge alignment, even more than in private equity, between the individual doing the investment and the young entrepreneur that wants to do it. The young entrepreneur wants to find something where he's going to maximize his chances of success, of actually doing well, because it's a great opportunity for him. He wants to do well because the way the incentives will work, as you said, Fabio, if he does well, he could end up with 20, 30% of the company, right? So there's a huge incentive to do well, which is what the investor wants at the end of the day. So you start off with the right incentives. Then you have, if you're active as an investor and helping out when needed, you're getting to know the person who's investing quite well. Now, if you invest in a private equity fund, you invest the money and then you have no visibility whatsoever, right? You give them the money, a check, you commit to it, you wait there after 7, 8, 10 years, you start getting your money back, and you rely on a team which you don't really interact with, to do the investment. Here you're interacting with an individual for a small amount at the beginning, as you said, Fabio. You're kind of putting some money to help out in that search, to then decide if you're going to do the investment or not. So you'll have a lot of time to understand the person and understand his target, so the company he wants to buy, and then decide if you're going to invest or not. And especially in these small companies, I remember at Apex, we did once a survey to understand, of the last, at the time, this was about 7 or 8 or 10 years ago, looking back to all the funds we did and all the investments we did, what was the kind of key to success of investments, in particular on the smaller investments. Okay, and what we found out is that at the end of the day, 70% was tied to the individuals running the firms. You could structure it in the way you wanted. Mind you, the second thing was the price you paid in, which Fabio, you touched on too. All right, but individual was a huge amount and a huge part of the success. Did you make money on the investment or not? So here you have a unique opportunity of working with somebody like Guido, who, and understanding the person, understanding how they think, going through potentially a bit of due diligence on the companies, etc. Because at the end of the day, you're backing that person. So from an investor point of view, it's great because you have that visibility before you end up committing your money, right, to it. So I think that's a really, really important part of the equation from an investor standpoint. The other part is that, as Fabio was saying, you're seeing here, you're looking at small companies. I personally believe that at the end of the day, investing in small companies with the multiples that you mentioned, Fabio, that you're getting in at is the attractive, is the juicy part of the market in the alternatives business. It's where you still have a lot of value. It's where you can make a difference to a company. It's where you potentially come in at a reasonable or low price. Today in the large private equity, you're paying huge amounts of money for any firm you're acquiring. And that's attractive from that perspective. And if you have somebody good, you can then use it as a platform to do other stuff, of course. So that makes it attractive also. Finally, there is, I think, well, there are two aspects which are important. The one aspect which is important, I think, is that you are contributing to generate, say, a cadre of entrepreneurs in the country you live in or in other countries or wherever, that hopefully will be successful also in other ventures. And finally, it's a bit of a philosophical point, if you want, but I'm a big believer in it. And I think of search funds a bit like SPACs. I.e., in today's world, you need flexibility. You need to put a few people together for a purpose, work together for a year, and get the result, and then you move on and do something else. Maybe with the same people, maybe with somebody else. And you think of it, SPACs do that. I'm a believer, apart from the fact that they're all kind of, going up in the air at the moment because they're exaggerated, but I believe SPACs are here to last. I think they'll be around for many, many, many years and will be real competitors to private equity. And I think the search funds is the initial years of what SPACs were, Fabio, I can't remember, 8 years ago, 10 years ago, when did they start? And I think it's another very flexible way for people to get together, to do something for a year, find the target, create it, and then do another one, move on, do it maybe with the same people or with a bunch of people in doing it. So I believe a lot in that flexibility versus the more inflexible model of investing in a large fund, which is still great and you still have great returns, etc. But there's a lot of space for these flexible tools, I think, in the market. Let me stop here.
Okay, thank you, Giancarlo. I mean, SPACs, is a very hot, just for you to know, in 2020, last year, in 1 year, in US has been raised 80 billion euro in SPAC with an average size of 330. 80 billion means 1 year of the total private equity market of Europe, according to the official statistic of the European Association. So it's an incredible amount. And in the first month of 2021 has been raised something like, I think, 7 billion, okay, in SPACs. We'll see if they can find a target, but certainly they are starting to be a great competitor for private equity large fund, because they are targeting, having an average size of 350 million, they should target companies which are very similar to the target of Apex or Blackstone or Carlyle or Dautianso. So they are exactly the same. And so, I mean, we'll see what's happening. Certainly a lot of money around, as Stefano Caselli was saying. Now, let me say that when we started with Stefano, we decided to put in our course at Bocconi, I mean, search fund. There were no search fund in Italy, so we were taking a huge risk, because maybe we were putting in the course something that was just a wishful thinking. But fortunately, I mean, that also in Italy we had a positive example, and Guido Fileppo was the first one. Not only, I mean, searching, I mean, and Guido is a typical profile of a searcher with 10-year experience in management. He has an MBA from INSEAD, and before, I mean, he studied in the London School of Economics and in the University of Paris. So he's a typical international profile, working, I mean, in a very outstanding, and he decided to leave his career. That was an outstanding career, okay, just to become an entrepreneur, and to become an entrepreneur in Italy, managing a small company. And so, first of all, we have to thank Guido, I mean, as Bocconi, because at least he demonstrated that there was something that, I mean, was feasible and realistic. So thank you very much. And at this point, I ask Filippo, first, why you took this decision, what was, and also why in Italy, and what have been the difficulties you have faced in the first phase, and now that you are the CEO of a company that you are facing now. Please, Guido.
Well, thank you, Fabio, for the kind introduction. Thanks for having me. Always a pleasure. I always say if I had studied in Italy, I probably would have studied at Bocconi, but I studied in Paris and then London. So why the search fund? I think it's probably everyone who kind of went through the path of entrepreneurship through acquisition. To everyone I spoke to, in the back of my mind, we always had this feeling since university or even before that we wanted to do something entrepreneurial, and then somehow get caught in the cogs of corporate world, or whether it's consulting or banking or some corporate job. Because we thought that entrepreneurship was just a startup, not in the startup that probably now we see, so a digital kind of app, but also just a startup in the sense starting a new business, whether it's physical or digital. So having the idea and then go for that. So I personally had always had hundreds of ideas in my head, but never one single one I could say, okay, now I bet everything on this. Right? And so the entrepreneurial journey has always been just kind of in the back of my mind. And when I discovered the search fund, and you know what he talked about before, it's to be straight to the point. It's just about getting to know the model, right? Because if you don't know it's there, if you don't know it's possible, then of course it's much more difficult. So when I discovered the model at INSEAD, I thought it was a great way for me to consult two things that were dear to my heart. So first of all was to being an entrepreneur, because I always wanted to do one. And then the second one was to be back in Italy, because I lived in Italy from a young age until I was 12. And then I lived in France, I lived in the UK, I lived in Australia, I lived in Switzerland, and then back to France for the MBA. So for me, it was a good occasion to come back to Italy. And why? Why? Because Italy is plenty of the ideal targets for a search fund. And so I decided to launch into that kind of crazy idea at the time, because as you said, Fabio, there was no one in 2016 that had done a search fund. So when I started to write my investment thesis and started to contact some investors, it was a very far out idea, right? So I think for me, those were the two main reasons. And I think that we can talk about a lot of other things. Then we come to the first problems when you start the search fund, especially when you're kind of the first one. There was 3 of us that started fundraising in Italy at the time, so end of 2016. And we all started our search fund in 2017. I'm happy to say that for the moment, the first batch of search fund in Italy all acquired a company. So at least the first stage was successful for the 3 of us. But then, yeah, the problem was really that no Italian investors knew the model. And then probably for some of them, also the idea that a young entrepreneur, I mean, I was 34, I think, at the time. So I wasn't that young. I did my MBA quite late after 10 years of work experience. But still, it was kind of it's a different idea. And then you get a lot of people thinking that it's only a model that works in the US. So a lot of, like, let's say, no's at the beginning, you know. And so that was the first problem, right? Because the model is not known. So there people see the results, and, you know, as we said, and Giancarlo said, and you said, like, the returns are very interesting for investors, but you just see them as numbers on a spreadsheet, and you see, okay, where are the countries? Okay, most of them in the US, a few in Europe. So I don't know if this is going to work in Italy, you know, which is fair enough. But in the end of the day, what I realized, and also what Giancarlo said is very true. At the end of the day, the ability to work with a potential entrepreneur, you know, punching in some time and helping him, mentoring if you want to, it's very nice, but it's not for everyone. Some people just want to invest in some private equity fund because they don't want to have to deal with it. So at the end of the day, the search fund is a specific investment for a very specific type of investor. So to all the search funders that wanted to raise a fund, and at the beginning they have some initial pushbacks, I would say that, you know, it's always in the numbers. The truth, though, is in the numbers. So the more people you reach out to, the likelier you are to find an investor that actually, you know, completely agrees with the philosophy behind it, right? So with every type of investment, there's a philosophy behind it. And sometimes a private equity investor will never do a venture capital investment because that's not what he's used to. That's not what he wants to invest in. So the initial pushbacks, at least in Italy, were of that nature. Is that more towards the fact that the model was not known. And then the second, let's say, obstacle for me, that I had no network in Italy because I never worked in Italy. So that was an additional difficulty for me, but that's just personal. Other than that, I think there are no problems, only solutions, I would say. So, you know, the most difficult thing is, as with every decision in your life, is just to make the decision, right? There's this, like, really old, I think, presentation. I don't know if it was from a management consulting firm, but you can see all the analysis done for months and months and months to do other entering a new business, creating a company, whether it's to start a search fund. You can do all the analysis you want, but at the end of the day, the most difficult thing is to take the first step and say, okay, I'm going to do this.
Guido, let me just because I have two curiosity. First, yeah. I mean, when speaking in Italy with entrepreneurs, and also and with others, they say, come on, I mean, how a young guy, so I mean 32, 33 can run a company, I mean alone with no experience. And it's very strange because it's 35 years that I do private equity. As I said, I come from Venice, and all the entrepreneurs I know, they all started when they were 20, 22, 25. So it's very strange that these people that started 2022 with zero experience, they sometimes say, come on, only 32 years, how he can do an entrepreneur? It's very strange because I do not know.
No, but actually, yeah, you're right. But, you know, that's, then, you know, once I raised the fund, and I had my investors, it was great. The first milestone is done. I had my search fund. And then I started searching. Then I encountered what you're saying, Fabio. Then the table are completely reversed. When I was meeting with the entrepreneurs that had their own company, then they looked at me and said, like, oh, you know, how old are you? 34, 35. Oh, yeah, that's the age I started my company. It's a perfect age to become an entrepreneur. So when you're discussing with potential targets, it's very easy to relate to them because they can impersonate themselves in you. From the investor side, it's more a little bit okay, they probably didn't risk everything when they're 20. They grew up in the ranks of some corporate jobs, or maybe they became a private equity investor, but it's not the same mentality. And I would have to say, I'm not saying all of them, and I'm not saying that private equity investors are not fit for investing in search funds, but it's just it's a different mentality than from entrepreneurs, right? And
so it's more the investor than not the entrepreneur having the problem.
Yeah, exactly. With investors, with entrepreneurs, it's very easy. And actually, also with entrepreneurs, I have some of my investors that were entrepreneurs, and I'll give you this example. For one of my investors, I won't say who he is, but I mean, it took me probably like a good 6 months and plenty of meetings to bring him on board. And then again, he was on board only at the last minute, and he was saying, "Yeah, I don't know if I should invest, half a unit with this guy or whatever." And I said, like, it's simple. If you invest your full unit, then I'm closed. If not, I have to wait another couple of weeks. Okay. And then he decided. But it took me 6 months. And then with entrepreneurs, I had one surreal meeting. I still remember to this day when I went to an investors meeting. It was organized by another investor. So I already had kind of an introduction to this person, and this person was coming from a family of entrepreneurs, so very used to starting companies, successful entrepreneurs. And after 45 minutes of my presentation, he said, "Okay, where do I need to sign?" Is that it?
And how was the passage? The entrepreneur, the selling entrepreneur, I mean, has helped the passage. Did you have some period together, or I mean, you just entered and then he dropped out? How was the transfer of, let's say, know-how
After the acquisition?
Yes, after the acquisition.
The entrepreneur. So we acquired 100%, but the entrepreneur stayed. The consulting agreement, especially the research and development side. So the first few months it was helping me, especially on the technical side, to understand a bit more the business. On the commercial side, one of the risks is that on these small companies, the entrepreneur has all the key contacts. It wasn't the case for Farmoderm. He had a few contacts, but we didn't have a concentration of clients such that it was a big risk. So really helped me more to understand, the products, how we created them, what a specific, we create very specific dermocosmetics company, which are not pharma, but it's almost pharma. So we sell to nursing homes and hospitals, but it's a cosmetic product. So he helped me through that thing, and that was very helpful. Especially because you're talking about problems after you acquired. Well, I think I have probably every single problem that could happen after you acquire a company. I had a global pandemic. Before the global pandemic, my main manufacturer went bankrupt. So after 3 months, maybe I was the CEO of the company. And so there, the entrepreneur was key in helping rebuilding the production because he knew exactly what to look for in external manufacturers. So he was pivotal in that sense. And then COVID hit. And then, he's 72 or 73 now. So I call him from time to time. He doesn't come to the office. But he's going to come maybe more often after he gets his vaccination.
Okay, thank you, Guido. And Stefano, just taking this point, human capital. Obviously, you are a great professor at Bocconi. One of the most important professors at Bocconi. You care about human capital. Search fund and human capital. Is that the right link, you think, Stefano?
Yeah, it is. Obviously, it's not the only one. Otherwise, it would be, exaggerating. But I have to say is the right link, especially on one aspect of the story, which is not related only to my university, but it's related to all top universities in Europe, if I may say. For ages, we have been, educating talents and high flyer students to become, very, very good managers. we can discuss about the content of to be a very good manager. It could be in a corporation, it could be in a financial institution, it could be in the public administration, it could be an institution, you know, an international institution. But at the end of the day, the obvious mindset was our students have to become, you know, top managers spread in every part of the world. And to be an entrepreneur, yes, was an option, but not exactly, you know, the best option or the first option in the list. My belief is that's a revolution, first of all, to turn a bit the list. I don't want to say that to be, you know, a good manager, a good citizen, a good leader, a good person, first of all, are not a priority, but we have to add in the list also the option to be an entrepreneur. Where to be an entrepreneur is not only an option because you are so lucky that your father, your mother, or your family has got a company, and in a certain sense you have to consider the idea or the option to be an entrepreneur, but really to have this option in, you know, in the mindset or in the portfolio of whatever kind of students. I have to say the effort, not only in Bocconi, but in all the top schools, is to consider and to help students to consider that's the option. That obviously requires a lot of skills, a different mindset, knowledge of many issues, and obviously is crucial and critical to understand in which way is possible to gather, to collect money, to make the dream something true. And search fund, in a certain sense, are a very fast link, because are a link whereas investors are ready to bet and to give money to a young person willing to become entrepreneur, ready or not ready, but with the ambition to lead a company. So coming back to your question, yes, it is the right tool because it's able to align the stars and to align, you know, the desire and the goal of investors with the desire and the goal of students coming out for the program of top school. And we have all to bet on this mechanism because it's very fast in a certain sense, with a lot of risk because we don't have lunch for free, especially in finance, but it's very fast because it goes straight to the point to help, you know, young entrepreneur to become real entrepreneur. So absolutely yes.
Okay, thank you. And now I needed to do a question to Giancarlo, because even if obviously it's organized in London and we have people coming, attending from all over Europe, but I mean, I cannot avoid to ask to Giancarlo, that has a huge international experience, investing almost everywhere in the world. How do you see, Giancarlo, today Italy as, I mean, an investment place, the attractiveness of Italy in general for private equity investor and specifically for search fund? Because obviously, I mean, we know that Italy, normally one of the problems of Italy is that we have a lot of small company. Everybody is complaining that Italian companies are too small. So on the paper seems to be an ideal candidate for search fund. But in general, I mean, how do you see, and you live in London, unfortunately, I mean, sometimes you come in Milan, not too often, and we would like to have you more often here in Milan. But looking Italy from London, from the international world, how do you see Italy today for private equity in general and search fund in particular?
Look, Fabio, I mean, today and also taking the past, right? And what I've seen in the past, the last 20 years, if you're also investing in Italy, actually, Italy has produced great results for a lot of investors. It's not a huge market, but the results have been good, because at the end of the day, you do find some great companies that learn how to kind of survive in the difficulties of Italy, right? Of the bureaucracy, of all the political issues, etc. But the Italian entrepreneur has always been kind of divorced by that and has found ways to operate in a way that's good. So from a point, generally speaking, as you asked, Italy has been a good, not huge, but a good market where to invest. In terms of search funds, I think it's particularly attractive because, as you said, you have a lot of small companies, and and I've been looking at small companies for a long time, and a lot of excellent companies that are in Italy that might be, on the kind of domestic market or might be exporting or whatever, but have excellences, if you want, from that perspective. And I've seen some huge returns coming from it. Where it's tougher is more the kind of growth, not growth, the venture side of it. That I'm not a believer. I did try way at the beginning to invest in in venture companies, so very early stage companies. And apart from some who have made it, but there's not enough, if you want, to really make it a big market, which is a pity. That's why the search fund is particularly well adapted, because you're not looking to an innovative company. You're looking at something that has been running, and then you put a young person in to kind of give it that extra boost. And Fabio, just a comment on the young. Is it attractive? How young can you be to be successful, etc.? I've always thought of a statistic which I've seen many times, where practically, I say practically because I'm sure there are exceptions, but no major invention in the world has been done by people over 40. Okay. So everybody who's had a breakthrough has been young, and it usually peaks in the mid-30s to late 30s. And your kind of capacity to innovate peaks there. So I think you want to be in a position to innovate also on a small company when you're young, in your 30s. Maybe not in your 20s or early 20s, but certainly as you're getting to 30, you want to get in, and then you're going to have a real peak. And it makes sense, right? Because your appetite for risk is higher, you see things differently, you innovate more, you take more risks, and therefore you develop it better. So I'm a big believer in, again, backing people at that age, taking those risks. And why venture capital hasn't really got in Italy, that's probably a longer discussion, more difficult discussion, but that's what I kind of think.
That's it, unfortunately. Now, before going around, I asked to Stefano Catapan if we have a question from the audience to be, I leave you to Stefano Catapan, now the word, and I know that maybe you have collected some questions, so I leave you, to make those questions to our panelists, if any.
Thank you. No, for sure. Happy to. I think we've started to receive some questions in our chat, and also some of them offline. I think an interesting one that can maybe group a few of them can be, and maybe it's more for Guido. When thinking about becoming a searcher, what's the best way to start? Do you start from a pipeline of targets? You start from a list of investors? And also, are there institutions or communities that can help you do that? Who helps you, when you only have the idea, to put it all together? So this is the first question.
Yeah. I think the first part of the answer already answered before. I think the first thing is just to start, because if you don't start and put yourself out there, it seems simple, seems very simple, but actually that's the major decision you do. It's often, when I decided to do a search fund, I was thinking about it for a bit, and then I just decided to do it. And then once I started to do it, then you start to decide how to bring about that change. But the first thing is just to really be decided yourself, right? And you need to put everything that you were thinking before, on the sideline. So that's the first thing. And then after, everything comes a little bit like that. So it's nowadays it's a little bit easier to find investors. We're talking offline before with Fabio, the searchfunder.com. There's a great deal of searchers around to ask questions. I think the first thing to do is just to speak to as many searchers as you can. if you want to do the search fund. Most of the searchers have great availability to talk to people if you're serious about doing it. Be careful of the people that just want to ask questions, what your experience. But I think the search fund world is very welcoming of new entry. So to speak to searchers, start to speak to some serial investors that you might know, and then then as you said, the network to start with is definitely the search fund network, starting with searchers. And then if you have a great alumni community like Bocconi, start with there. I started with the Inside Alumni Association, in Italy, in order to get me started with meetings, start to see investors with a lot of, experience in private equity or venture capital, see what they thought about the model, and then you can test that. But of course, that was almost 5 years ago, 4 years ago. So now even in Italy, in the UK, certainly in Spain, it's much easier. There's a lot of people that are interested in investing in new search funds. It's a great appeal for the search fund. And then Giancarlo is one example tonight, but there's many investors that are interested. So don't be afraid to reach out, because once you decided to embark on the journey, there's a lot of resources out there.
I'm seeing a lot of questions arriving in the chat. So Stefano, Catapan, I mean, you manage them, because I see a long list of, and that's good, because it means that is an interesting item. And please, so I ask that also answer are short, because we have quite a long list now. Come on, Stefano.
So another one, and so I think he was mentioning the discussion that returns from the perspective of investors, obviously, are quite meaningful and attractive for this particular asset class, also vis-a-vis other investment opportunities. Do you have any statistics on what would be the expected average return of these kind of instruments?
I can answer that very quickly. I mean, we have statistics. The two universities at the moment providing statistics on returns on a systematic basis are IESE for Europe and Stanford for US. And now, I mean, sooner or later, Bocconi for Italy. We'll see when we have enough. According to Stanford Business School, statistics updated to 2019, starting from 2008, the gross IRR realized in US from 2008 to 2018, the gross IRR has been 37%, approximately 30% plus in all years. Taking out the top three has been approximately 22%. I'm just taking the average, okay? And taking out the top five, so the top five performance doesn't go below 20% IRR. That's according to Stanford Business School US. In Europe, they are practically the same. The average IRR from 2014, when they started the statistics, to 2018 has been the gross IRR approximately 30%, slightly lower in 18, 19, 28%. Taking out the first three, on average 25%, and taking out, excluding the top five, not below 17%. That is for Europe, so very similar statistics based on quite a significant number of cases. So as we said before, and Giancarlo Aliberti obviously took this point very clearly, we are speaking about, maybe to conclude the statistics, it's important to know some statistics about the loss, and obviously 2/3 of search funds are making the acquisition, one third is not finding, is exactly the same percentage in SPAC. So 1/3 of searchers are not finding the target, 2/3 are finding the target. And the loss is, in this case, international search funds are more conservative, because the loss rate is 11% out of the total of the investor done. In US is slightly higher, is 25% the loss rate. Not losing all the money, just below the amount invested. okay, then obviously there is, in some case you lose all the money invested, in some case, I mean, only part. But the risk-return ratio is quite interesting. Those are the official statistics. In any case, you can find those statistics in the website of IESE for Europe and Stanford Business School for US.
Thanks for that. And maybe as a follow-up question, talking about Europe versus the US, obviously, you've mentioned this is an instrument that, has started from the US and then evolved and then only recently came into Europe. But it sounded like, I mean, are there structural differences between the two models, or are there two models, or is it just the US model sort of being used in Europe as well? And, are there any structural issues that make it harder, for searchers to be successful in Europe versus the US?
Let me say no, because the average multiple is more or less the same. In US is slightly higher, but we are speaking about multiple that unfortunately, Giancarlo, in our world is, out of the year, because 4.5, 7, 5 times, 6 times is already high. So, not in terms of multiple. Also, the average dimension, US versus international, I'm just reading the statistics, is more or less the same, okay, because let me say that, revenues for US or maximum goes to 10 million revenues, and the same is for Europe. So honestly, not huge differences in terms of structuring deal. They are all leverage. Most of those deals are leveraged, so at least making 100, the enterprise value, at least 50-50. I think, Guido, that is probably the same I don't want to disclose your financial structure, but normally at least, 50% comes from debt and 50% is the equity component that is underwritten by the search. Let me say the only negative side, I don't want to, again, I come from Venice, so I don't want to be, politically correct, but it's strange that the percentage of female searcher is extremely low, is 4% for Europe and 7% in US. And that's very strange, because I really know a lot of outstanding women entrepreneurs. And that is the only thing that comes a little bit strange, and is the same in use. And I think that something that should change. And but also in terms of percentage of people coming from MBA, more or less is the same in Europe and US.
That's very
I think if you Stefano, I think one of the key aspects as well is that if you look at the historical way the search funds have developed in the US, they started in 1984 or something like that, and it took probably 10-15 years until you started to see more than 10 search funds being raised every year. And then I think now for the last 5 years there were almost like 50 or 60, even more every year. So I think it just took also there a little bit of time for the model to be expanded. So I think in Europe we're still at the beginning. Mark Bartomeus, who was the first one in continental Europe, started in 2011. So.
Point on female entrepreneurs. I know that we have a few, female potential future searchers on this call. So hopefully this session will serve as a push and an incentive for them to take the step. So moving on to the next questions, I think we have a couple of, I would say, more technical questions on how interests align between the searcher and the investors. And I think also specifically, there's also a question on whether, the skin in the game on the side of the searcher, I guess, beyond sort of leaving his job and dedicating, his activity full time to the search fund. Is it typical for searchers to also put capital at risk, or is it instead more of a, capital coming from the investors and sort of
I will now ask maybe Guido to comment on that, but statistically it's quite common that the searcher takes one I mean, quote at the beginning, at least of the search capital, okay, is quite common. And the aligning mechanism, and I would like also Giancarlo and Stefano maybe to comment, but aligning interest, I think, is the basic rule for all private equity investment, let me say. I mean, that is basic, okay? And I think in search fund, the aligning mechanism are even more important, but it is really, if you ask, I mean, there was a book written, The New Financial Capitalist, 20 years ago by Harvard professor Baker Smith. They were asking to KKR, what is the key success element for private equity? We are speaking about large buyout. And they said, aligning the management interest with your interest, no doubt. That is the best. Guido, how you are aligned? What is your incentive package, if possible to be asked?
No, I think we had some questions like that when you're doing the acquisitions, like, oh yeah, does the searcher have enough skin in the game? Well, I think like every entrepreneur, yes. I mean, like, what can you put more than your professional life in the 5-7 years? Even more if you put the search period, and in my case, the looking for funds period. So I think the skin in the game is there. Realistically, then, I think if a searcher has the opportunity, he will invest also a little bit of money in the acquisition. I invested a little bit of money in the acquisition. I didn't invest some in the early stage because I preferred to have another investor bringing in his experience instead of me putting something just to show that I believe in the project. So I didn't put it at the beginning. But I think it's also good for the financial incentives of the searcher to have also some equity, right? Because then you participate in the normal equity, the preferred equity as opposed to the common equity. And then my incentive package is really standard. I mean, it's 1/3 of your equity comes at acquisition, 1/3 through the management phase, and 1/3 at exit, depending on the IRR. And that's typically for a solo searcher. That's the typical search fund structure. And then if you have a duo searcher, which now just this week the one has been launched in Italy, then it can go up to 30%, of course, because there's two searchers. But so I think, yeah, I think the interests are even more aligned in a search fund deal than in a private equity deal, because a searcher puts in a lot of their professional life and career at risk for a considerable amount of time.
Yeah, and I must say, if I add, from an investor point of view, of course, there has to be alignment, right? But that's, I think we all agree, and it happens. Frankly, that the person who's doing the search should put in, a significant amount of money in. It's not super important because I think they've already made a big choice of spending time, of, Guido, as you're saying, leaving another career or another opportunity to do this, and having a big upside, which is what's pushing it. Then, if they want to put something, but that doesn't make a difference, put it that way. There might be some convenience for a number of reasons to put something to work and invest at the beginning, but that wouldn't be the change if you want in seeing the alignment or not. I think the alignment comes very much on, if we don't make a lot of money, none of us are making money, right? You can't make a lot of money and I'm not making it. So it has to be kind of aligned in terms of value creation. And if I start as an investor, if you're starting to make, I don't know, huge multiple, then it's right for the entrepreneur to search, want to have manager to get more. And so to have another third or whatever, because that will push him to, not make 2 times the money, not 3, but to make 5 times the money, right? Because he can see a way, potentially also, frankly, owning the company one day, or a substantial amount.
Very interesting. And as a sort of a related question to that, maybe on governance, how does the governance of the company work? Obviously, it has been mentioned in the discussion that it's important for searchers to be supported. I mean, the role of the investors here is much more prominent than in any other, private equity or venture capital funds. It's typical for searchers to receive guidance and support from investors. But how does that work in practice, I would say, in the day-to-day sort of management of the business, and are investors typically involved, as part of the board, or do they also get, how do they help? I guess if you could share a couple of examples or insights.
I mean, in my experience, yes, true. The guidance part is true, and also as Fabio mentioned, like usually the involved investor is only a handful in each deal. Also because if you have to manage, more than 15 investors, it would be like a full-time job just to manage investors. But in terms of the actual role of the investor, then in my case, I followed what other searchers have done in the US particularly. So during the search phase, at not a board of directors, but an advisory board, we could meet every quarter to discuss the pipeline and discuss the way we would approach certain markets or others. So that was helpful, but it's more of a guidance board. And then, of course, all the investors then are available if you go in a specific sector where you know that one of your investors has experience, that you tap into that experience, of course. And then after the acquisition, that's really where the investor role comes in also handy. So of course, all the board members are investors, and they usually have quite a big role in sitting on the board. And in my case, I have a really good relationship with my chairman, and constructed this relationship, which is, even for the searcher is a new thing, right? You're running the company, you're an entrepreneur, so you have somebody that guides you towards focusing on the most important things, and then focusing on the on try to understand what is the strategy, what is the vision of the company, and that it's helpful to have those investors helping you at the board level to really focus your attention. Because when you step in the first day, it's great, you've done the acquisition, which is probably the most difficult part of the search fund, is actually getting the acquisition to close. It's really underestimated in the search fund kind of documentation, but it's one of the hardest part. And so you're in, then on the Friday you close, and then on the Monday you're in, and that's it. You have to run the company. Everybody's coming to you for guidance, and you have to understand, every single detail of the company. And it's easy to focus on small details that are not important. I mean, they're important for the operations, but probably there's more urgent things to look at. And I think the board as such helps you that way, right? Because you didn't grow up in the business. It's different than in any other kind of company where maybe you go up through the ranks, and then the company, now you become the CEO. You already have a view of the company, how it works. So due diligence is one thing, and then once you step in, it's a totally different reality. So in that sense, really having a functioning board and investors that can help you and give you guidance is important, right?
Before taking the next question, well, Stefano, for Professor Caselli, for Stefano, I mean, at the end of the game, I mean, search funds are fitting with this new trend, and obviously what they need also is an ecosystem of help from different sources. And I know that Bocconi is doing a lot of program to stimulate entrepreneurship, venture capital. There is also a hub. How do you see, are things changing from your point of view? I mean, also from Bocconi point of view, do you see that there is now a good environment, a good ecosystem connecting, I mean, companies, entrepreneurs, university, and is the right time for those kind of investment? What do you think, Stefano, from the Bocconi Observatory?
Oh, it's not only Bocconi Observatory, it's my feeling of the market. I have to say it's a work in progress. I have to say it's a work in progress because if we come back to 10 years ago, giving an answer to the same question, I'm talking about, I suppose your question is related to Italy, correct, Fabio?
Sure. Bocconi is in Italy, even if it's international. But
it's a European university.
Yes,
no, my answer is not related to Bocconi, it's related to Italy. I have to say, coming back to 10 years ago, yeah, probably the ecosystem was not there. Because Italy is a very entrepreneurial country, no doubt about that. But it's a country where it's very difficult to create your own company. So it's a sort of contradiction. So it's a country of people are very entrepreneurial, but in the same time are not able to create companies, if I may say, and especially the Italian mindset is that it's very difficult to scale up. Not only because it's the country of SMEs, but because it's the country in which we don't have big companies. So that's the limit in a certain sense of Italy. And you can say, is it relevant for this night? And my answer is yes, it's relevant. Because if you want to create an ecosystem and if you want to promote, the creation of new companies, you need to have an environment where you have a very, very big companies. Because if you want to create your company, it's not just simply to survive and to create, a small shop or something similar. So the ecosystem works if you have the ambition, even if you're ready to default, to create a giant, to create a unicorn. And this is missing in Italy. Okay, we know, because if I consider Fortune 500 in Italy, we have just simply 6 companies becoming to Fortune 500, while in France 31, in Germany 23, in the Netherlands 15, and so on. So that's the issue. I have to say something is changing, not in terms of big companies, because Italy doesn't have big companies, but in terms of the effort. So now the issue to create companies is on the table of policymakers, is on the table, is on the debate. There is a serious debate also to promote, entrepreneurship using tax incentive. I have to say it's the right moment to discuss about that. We have, many activities all around Italy also to promote, entrepreneurship. So it's a work in progress. What is missing, I have to say, is, to think bigger, because at the end of the day, the ecosystem works if you're able to scale up. And I hope that this is the change of mindset that is going to happen in Italy. Otherwise, it will be very difficult to say Italy is a country to create, your own companies, because you don't see, the final outcome of this process, which is a landscape of big corporations. And big corporations are very useful because they give also energies, to young entrepreneurs. They create opportunities. They break the ice in terms of R&D. So this is probably the missing point, I have to say. But work in progress, and I'm quite optimistic on that.
Okay, Stefano Catapan, you have other question. Please go ahead with the other question of the panel, of the participants.
We have a few questions a few final questions, which I'll try to group into a final one as we are approaching the end of the hour and a half. And these questions are related to, identifying, the searching phase, so identifying the target, and also the acquisition process. And what would be interesting to know is, how do you select, first of all, the targets? Are there specific industries that are more attractive than others? And then once the target is identified, how do we actually make sure that you're able to buy it? And how do you compete with other bidders? Maybe one for Guido.
How do you compete with other bidders? I mean, Italy is a little bit different in that sense from the US, because even when you look at targets that are relatively small, there are a lot of club deals, a lot of small private equity funds that also look at the same kind of targets. Although the search fund, its particularity, it's really niche. It's not only like a smaller company, which might have 1, 2, 3 million EBITDA or even more, but it's a company that has that characteristic, but also you cannot run it without anyone at the helm, right? So in those cases, what I found is a little bit harder for club deals or private equity to put an experienced managers in those companies, and therefore that's your target. That's the target of the search fund. Therefore, you should not have many competitors, but there are, and especially when the company starts to be on the market, it depends, I guess, at which stage you're in. So, I mean, it's there could be so many different, options that it's, we don't have much time to talk about them. But essentially, in my case, for example, I had a lot of companies which were, first of all, brokered. So it was not really a competitive process. So the M&A advisor always tells you it's not a competitive process, but in the end, it's always a competitive process. And then, no, it's only you, blah, blah. But then a lot of those deals that sometimes fall away. And one of my investors once told me, also in the US, one of the best pool of companies for a search fund to go in, it's when a private equity deal fell through, right? So maybe a failed attempt to buy the company. For some really maybe a soft reason, of course, if it's a business reason, you shouldn't buy it either. But in my case, also for Farmoderm, the owner didn't want to sell to a big corporation, didn't want to sell to a competitor, didn't trust only financial investors, and in the end, after a long time of spending time with the entrepreneur, he found that actually it wasn't too bad to leave the company to a younger person, a younger him, right? So I think there is competition for sure. It depends on the company. Some companies have a younger manager that could stay on for a private equity kind of time window. So even if the entrepreneur is 65, you can probably give another 5 to 6 years to the company. But in some cases, the search fund is one of the only way you can get generational change in the company. And I think those are the best deals for the search fund when there's no competition, basically. Yep.
Okay. Stefano, I think we are reaching the end. So I leave you, Stefano Catapan. I mean, you are the host. So, I mean, I think you should, say something at the end of this.
Indeed. So just some final remarks. First of all, thank you everyone for joining. Thank you to our audience for submitting, for being active in the submission of, interesting and detailed questions. But thank you especially to our panelists and speakers, Fabio Sattin, Stefano Caselli, Guido Fileppo, and Giancarlo Aliberti. We will try to, I think we've tried to record this session, and we will try to send the link to all of those who have joined today's session. And I would say for the Bocconi Alumni community in London, as I said at the beginning of the session, we have a pipeline of more events on different topics coming up in the coming weeks. Some of them will involve, again, Professor Caselli. We're always happy to have. And so I will just give you, sort of say goodbye and on to the next one. Thanks again, everybody.
Thank you, everybody.
Thank you.
Thank you.
Thank you. Bye.
Thanks, everybody.